Hello, Assalamu alaikum students. This is your teacher Azka. I teach accounting and business to the O levels and A level students. And first of all, I would like to tell you that my online classes have been started and admissions are open now. And if you are willing to join me in my online classes, if you want to elevate your accounting standards, so you can DM me on anywhere. Like if you want to contact me on WhatsApp, Instagram or Facebook, so you can. Okay. So okay, so today we have a topic which is club accounts and the second name which is used by the CIEs in their terminology, which is non-profit organization, and you can short this name by NPO. This topic is useful in O levels and IGCSE. Like um, this topic is basically related to the syllabus of IGCSE and O levels. Okay. So code for O level is like for accounting 7707 and for IGCSE it is 0450. So actually my throat is little bit hurting, so that is why maybe my voice is little bit low. So I just hope that you guys will manage um by my voice, and just excuse and sorry for this in advance. Okay. So like we have seen a lot of accounts in our accounting book. We have read sole trader, okay, and partnership account and company account, um, and incomplete records. This is for the you can say that type of businesses which is not so big, like this is for maybe the shopkeepers and the like this is basically for those people who don't maintain any double entry system. So incomplete records, and after that, like these accounts basically sole trader, partnership account, company account, and all type of accounting which we have studied in our accounting book. All type of enterprises basically have motive to earn profit for their business. Whenever if we are talking about the sole trader, so of course sole trader also we also want to get some profit from its operations, from its business and partnership account and company account. Like all the businesses basically are working and operating different activities just to get a profit, just to get the dividend for their shareholders. So, but in club accounts, this is very, you can say that a different thing which is happening in club accounts and NPOs. So you just guessed by the name of NPO. NPO basically this is the organization which is they're getting a high profit. Getting a profit is not their primary objective. They just make profit, but they use this profit to like different social objectives. For example, like there are a lot of non-profit organization which is established in Pakistan and also in other countries like Greenpeace and American Heart Association. So basically, this American Heart Association working for the people. who are maybe suffering from the heart disease and they don't have any, that like they are maybe not financially stable and they cannot manage expenses for their treatment. So that is why American Heart Association is a non-profit organization. Like they earn, and after that they use that profit for the well-being for the people. Okay, so these type of organizations called non-profit organization. And the main feature which is totally different from these type of businesses is that they don't have any motive to earn profit. If they earn profit, it doesn't mean that they are not earning anything. Yes, they are earning a huge amount of, you can say that, income at the end of the year, like surplus at the end of the year, but they are not using that surplus for maybe for, you can say that, paying dividends to the shareholders, or maybe they are using that profit in for their personal motives. No, it is not like that. Non-profit organization always use their surplus to the well-being for the people. Okay, and the other one is club accounts. In Faisalabad, there is a club, and I think the name of that club is Chenab Club. And maybe a few of you maybe got subscription of that club. So in club accounts, basically we just subscribe the that club, and in order, like if we have subscribed that club, so it means that we can be eligible to get their services, we eligible to get their facilities which have been providing by the club. For example, you can use the gym, you can use the swimming pool. Okay, you can use the restaurant which has been constructed by the club owners. Okay, so these type of services you can get if you subscribe their subscription. If you get subscription, so it means that you can get a lot of facilities which they are provided to you, so you can use the main difference in club accounts and NPOs. Okay. So since NPO and NPO is, we know that they don't have any kind of intention to earn profit. So it means that when we are making different accounts for the non-profit organization, so it means that terminologies which we have been using in profit-making organization, we can't use them in non-profit organization. Okay, so what we have to do is, in non-profit on for the club account, for the club and the for NPOs, we have to make these accounts: trading account, and you can see the refreshment account also, refreshment and canteen account, income and expenditure account, and surplus. Surplus is basically the terminology which is, you can say, the totally different from the profit making organization. Basically, this is the terminology which we have been using since so long in profit making organization. For example, sole trader and the sole trader partnership business. We know that if we are making if we are maintaining the accounts for the sole trader and for the partners, so we make income statement. Okay, and we make financial position. We use profit, like when we have so now we are going to see that what is the differences between the terminologies of profit making organization and non-profit organization. So basically, when we are talking about the profit making organization, so it means that we are talking about the sole trader for the partnership account, and for we are talking about the company account. Okay. So like there are a lot of differences between their terminologies. Like if we are talking about the income statement, if we are making income statement for the profit making organization, but when we are making income statement for the non-profit organization, so it will not, it will, the main difference between the terminologies is income statement in profit organization, but trading account or refreshment account in NPOs. So this is the basic, we can say the basic difference between the both terminologies. If you're talking about the profit for the year, okay, you know that when we are making income statement, so we have sales, we have cost of goods sold, we have deducting cost of goods sold from the sales, what we have after that we have GP, which is gross profit, okay, and after that we have expenses, we have to deduct expenses from the GP. So what we have now, we have profit for the year, okay. But if you are talking about the non-profit organization, so we cannot say it the profit for the year. We will say surplus for the year. Okay. Surplus for the year. The terminology has been changed by the CIEs. Like it is not new. It is not new in syllabus. It's being like that for so long. So surplus for the year. And if it is the loss for the year, so we will not use this loss word in NPOs. We will say deficit for the year. Okay. And if we are talking about the money or the resources which has been invested by the owner. But if we are talking about the NPO, because this is not kind of investment, because if we are talking about the investment, so it means that we have intention to earn profit. But in NPO, we don't have any intention to earn profit. We are just working for the people. We are just working for the well-being for our society. So that is why we don't use this terminology in NPO. Instead, we use the accumulated fund. Why we are saying like this, why we are using this term accumulated fund, because most of the NPOs are running by the funds, which is you can say that the many big businesses, many businesses and many persons, many you can say the wealthy organizations always try to help the NPOs by giving them different funds, or maybe the funds will be maybe funds in form of cash, or maybe in form of building or land or something else. Okay, so that is why we use accumulated fund instead of capital, because this whole organization is invested by the different businessmen and different financial institutions, and they are just giving that money as a fund. You can say that as zakat also, okay. So that is why we cannot say that this is the invested money is capital, because NPO don't have any intention to earn profit. So if there is no intention to earn profit, so it means that there will be no capital. There will be accumulated fund. After that, we know that if we are making accounts for the partners and the for sole traders, so we use cash book. Cash book basically very simple. It has two sides, debit side and credit side. So basically debit side is payment side and credit side. This is basically payment, so you can see the expenses. And credit side is we use this when we are getting some cash or cash in form of check, or maybe directly in cash. Like if we are getting cash from our cash sales, or if we are getting cash from the selling of any non-current asset. So all type of cash which we are receiving in a particular year, so we add that cash into our cash book on the credit side. And when we are paying someone, when we are paying to a supplier in form of cash, so it means that we have to debit it, because this is increasing our expenses and decreasing our cash. Okay. So when we are talking about the profit-making organization, so we use this terminology cash book, but in NPO we use receipt and payment account. It is just as cash book. Like there are no any difference between cash book and receipt and payment account. It is like these both have same features and same concepts regarding debit and credit system. So like there are no any such kind of you can say the very big difference between both of these. Like they both of these accounts have no you can say that differences, because these two accounts basically have same similar, like they have a lot of similarities. So receipt and payment account basically cash book. Okay. Okay, so this is the main difference between terminologies. So now we are going to learn different accounts which we supposed to make when we are like this basically chapter is very important in um, exam perspective. Company account, club accounts, cash book, ratio analysis. These accounts are so special. Like these accounts, basically, you can say that most of the exams, which I have seen in my past, mostly these accounts, these questions basically coming again and again for since so long. So that is why you should you can say that put some extra efforts to learn these accounts. Okay, so the next is receipt and payment account. Like we just learned this because this is the type of cash book. So now we are going to discuss about the different accounts of NPOs. So first of all, talk about the receipt and payment account, which is cash book. So receipt and payment account is summarized cash book, okay, for a given period, like for a specific year, like maybe 2013 or 14 or something else. This is a summary of cash transaction, like all the type of transaction which is maybe paid, or maybe you can say maybe paid or maybe get paid or maybe received in form of cash. Every transaction which is paid and received in form of cash will add into receipt and payment account. Okay. So non-profit organizations prepare receipt and payment account at the end of the year, and non-monetary items such as, for example, depreciation, bad debts, etc. are not entered in this account because this is our non-cash expenses. This is our expenses, but this is non-cash expenses because we are not paying anything like if we have depreciation for this year, maybe $2,000. So it doesn't mean that we are paying $2,000 to someone else, to our supplier, or maybe to our customer, or to maybe some like any kind of authority. We are not paying any cash for the depreciation, and also we are not paying any kind of cash for paying the bad debts. So that is why this is our non-monetary items, and we can say that depreciation is basically the non-cash expense. So that is why it wouldn't come in receipt and payment account, because this is for that type of transaction in which really in real any kind of cash transactions occur. So these type of transactions will come in receipt and payment account. So these basically depreciation and bad debts will not the part of this cash and receipt and payment account. So this would be not entered in this account, and no adjustment is made for the approval and prepayments. Like any kind of approval and prepayments would not made in the receipt and payment account. Okay. So after that, the second account is basically income and expenditure account. I think we should first discuss the trading account. Trading account, or you can say the refreshment account. So basically, NPOs not you can say that totally dependent on the funds. Okay. The club account where non-NPOs basically maybe have some cafes, or maybe NPOs have some restaurant, because they want to earn something other than funds, because they can use that cash, or maybe they can use that profit into their operations, which is totally you can say that they are doing this for sawab, for the intention of sawab. So that is why for these type of NPOs, which may be into different other businesses like restaurants, and for example, for the cafe, like maybe they establish a cafe or they constructed a restaurant. So that is why for that type of NPOs, we will use trading account, or you can say the refreshment account. And in club accounts, you may be aware of that if you have a membership any club. So you know that there are many restaurants which opened in club, and there are a lot of other facilities which you have been using since so long from the club. So you are paying an extra amount to that restaurant. Yes, you subscribe that club, but it doesn't mean that you will use the facilities of their restaurant for free. No, you do. You have to pay extra amount to the restaurant. If you are taking any coffee, if you are taking your friends to your club, and if you are like maybe going for a party in club, if you are having lunch with your friends in your club, so you will have to pay extra amount to the restaurants, okay, for to the cafe. So for that cafe or for that restaurant, we have to prepare a separate account, which is trading account or refreshment account, you can say. And this is a very simple account. You may be aware the trading section of our normal income statement, like the inventories and all these things, okay, like the sales and all the sections which we have been learned from the income statement, sales and cost of goods sold, GP and all the things. So this would be same in case of trading account or refreshment account in non-profit organizations. So although profit making is not the prime objective, for some organizations do trade in a similar way to the business. Like they running their operations just like the other businesses, like partnership or sole trader or something else, to support their operations by buying and selling items for profit. So these trading activities are undertaken to raise additional funds for core activities. Like they don't want to rely on funds. Like they are receiving for funds from many financial institutions, many businesses, and in the form of, you can say, the zakat, or maybe you can say zakat, or you can say the whatever the name we can use in this, zakat or sadqa khairat, whatever you say, okay. So they don't want to rely totally on funds. So that is why they think, okay, we can open a restaurant, we can open a cafe, we can open a shop, so we can earn some extra money from that operation, and we can use that money into um, um, our prime objectives, which is totally for the well-being for the people, okay. So core activities are subsidiary activities for the organization. Like example, running a restaurant, like I just gave these examples to you, a cafe or a shop, and this is very similar to trading account. You know, the trading account which we have been making for the sole trader and for the partnership business. So this is the same. Trading account prepared for trading business, but it is used to calculate overall profit for such activities instead of gross profit, gross loss only. The overall profit or loss of such activities is then taken to the income and expenditure account. Like when we are going to make the refreshment account for any NPO, so at the end we have profit. Okay, we will not if we are making income and expenditure account, so we use surplus terminology for it. But if we are making trading or refreshment account, so at the end, if we have a positive figure after deducting the expenses, so we will say profit. Why? Because this cafe and this shop is working only for the profit. So that is why we use profit terminology for it. But if we we just shift that profit amount to the income and expenditure account. Income and expenditure account, basically it is for the whole NPO. You know, if we are if there is a hospital, Okay, ABC hospital, and maybe they are serving too many people for free. So ABC hospital may have cafe outside the hospital. So of course they will have profit from the cafe, but all the activities and all the accounts, like if a hospital is not running on this profit, it is not dependent totally on this profit. No, it has their separate accounts, it has their funds. So that is why we have to separate this cafe from the ABC hospital. We have to maintain another account. We have to maintain another trading account in order to get a exact figure for the profit. So that is why we should make a total different refreshment account for that cafe. So after that we will have exact amount of profit which we have gained from the cafe. So we will use this profit into income and expenditure account. We will add this profit in income and expenditure account. Basically income and expenditure account is for the whole ABC hospital, but this trading and refreshment account only for this cafe. Okay. So now we just discuss about the refreshment account. So after that, we will have to make the income and expenditure account. This is same as income statement, but the terminology basically changed. This is just same as income statement. Yes, but there will no cost of goods sold involved in this. So trading organization prepares income statement to determine financial performances for the year. But a non-profit organization prepares an income and expenditure account for the same purpose and similar to income statement of profit making organization. It also includes incomes and expenses for a certain financial period based on matching concept in order to determine performance of the organization. Okay, so maybe you are aware of this matching concept. Like I will make another video for that, the basic accounting principle. So we will discuss the matching concept in that specific video. Okay, so we are just discuss about the three type of accounts which we have to maintain in order to if we are talking if we are maintaining, if you are going to solve, if we are and if we are going to understand the NPO, so we have to make some certain amount of accounts. So we just discuss three accounts from that specific accounts. Okay. So after that, let's discuss about the expenses of NPO. Like if we are maintaining separate trading or refreshment account for the cafe, so what other expenses NPO have? So we know that this would be separately, like we would calculate this separately in refreshment account. So other type of expenses would be for the NPO is competition, raffle dance expenses. NPOs basically used to arrange different competition segments, and maybe they will call any singer, or they can arrange a concert, or they can maybe call any dancer and they can arrange a concert for the people. And from that type of concerts they will get some, you can say, the income. And of course they will have also, like they have to incur some expenses also. So these type of expenses or incomes we will you can say that and expenditure account. Okay, so what type of So what type of income and what type of funds and like what type of funds NPO have? So first of all, we are going to discuss about the grants and donations. So government grants, because since NPOs working for the people, like they are serving people who are maybe suffering from different diseases, or maybe somehow they are protecting the environment of our society. So that is why sometimes government sometimes governments arrange some grants for the NPOs because government want them to work continuously for the well-being for the environment and well-being for the people. So that is why government sometimes give them some grants in form of cash or in form of any resource. Donations, which is maybe given by the businesses and different financial institutions, and proceeds from fundraising projects. So when specifically stated are treated as capital receipt. Like if we are receiving any government grants, if we are receiving a donation from any businesses or maybe from the financial institutions, so we can call it the capital receipt because this is the capital, because this would be invest in the business and this would be used by the NPOs for the good for the good for the people, and are shown as special funds with the accumulated funds. So accumulated fund, just this is the capital for the NPO. We just discussed above in when we are talking about the differences between terminologies. So we just discuss the accumulated funds there. On the other hand, if these amounts are not received for specific purpose, like if any NPO is going to, like if we are just keep this example as it is, if we are stick to that example, ABC hospital. For example, ABC hospital is going to open we can say a new branch. If they have a branch in D type colony, okay, and they are like supposed to have another branch, like they are going to establish another branch in D ground, okay. So what they will do, ABC hospital will have to raise finance for opening their one more branch in D ground, okay. So what will they have to do? They will contact with different financial institutions. They will contact with the government and they will give them grants and donations for this specific project. Okay, like they are basically giving that type of funds only for the one purpose, and the purpose is basically constructing another branch in D ground area, because maybe there are maybe more people who are living in the ground, there are more people who are suffering from the heart disease, and they are more in need. So that is why they select that area, um, considering that there are a lot of people who are suffering from different diseases. So that is why if we are going to construct, if we construct the hospital in the ground, so maybe there are a lot of other people who can get benefits from our ABC hospital. So for that specific project, for that specific purpose, they will contact the government, they will contact the different financial institutions, they will contact the businessmen, and they will convince them to give them a specific amount of funds so they can proceed with this branch. Okay. Okay, so if these amounts are not received for the specific purpose, like this specific purpose, they're treated as revenue received. Like for example, if they don't have any project, or maybe they have project, but any government give them grants for like for not for this T ground branch, they just give them maybe you can say the not for not special cause. Okay, like there are not special cause for of giving grants to the ABC hospital. So if there are no specific purpose, if there are no specific project which is going to start by the ABC hospital, so we will treat that donations, we will treat that grants as a revenue receipt. But if they have a purpose, if they have project, and if they are getting grants and donations from the businesses, from the government, and they are going to use that grants specifically for constructing the branch ABC, another branch ABC hospital in the ground, so we will treat that receipt as capitals. Okay, and included in the income and expenditure account as income. So if it is revenue receipt, so we will add this revenue receipt, add this income in the income and expenditure account. And if it is about the capital receipt, so we will use this in financial position, statement of financial position. Okay, because we know that capital and accumulated funds, you can say, we always record this into statement of financial position. But if it is revenue C, so we will add into the income and expenditure accounted income. So the next term, so the next term is gift. So gift to NPO in the form of tangible assets. You know that there are a lot of wealthy people, and they have, they have their will in their lives. They say, like, they call to their lawyers, and they said, okay, we are interested to to give a specific land from our assets to any hospital or to any other NPO, and we are just doing this for the intention of sawab, like there are not any specific reason for this. So these type of thing which a wealthy person or any businessman or any business want to give the NPO. So this is basically gift. So gift to NPO in the form of tangible assets should be added directly to the accumulated funds and listed as an asset if a value is stated. Okay, value stated, for example, if they will give any land and its value maybe 1 CR, maybe 2 CR, so we will list this land as an asset for the NPO in statement of financial position. It should not appear in the income and expenditure account because this is not revenue received. However, small gifts in the form of money may be shown as an income. Like if any person may be giving 1 lakh or 2 lakh rupees, or like very you can say low amount, in the form of low amount, which is very small gift. So we can use that specific amount as a revenue receipt, and we can add this income to the income and expenditure account. But if it is a tangible asset, if it is a land or any other thing, and the value is stated, and they just want to they just want to give as a gift to the NPO, so we will list that asset into our uh, statement of financial position. So the second one is legacy. Legacy refers to property received by virtue of a person after his death. So acquisition of such property is recorded as capital receipt because it is also kind of fund. So that is why. So properties or cash received on account of legacy are shown as assets on the one hand and are added to the accumulated fund on the other hand. For example, if a wealthy person maybe just made a will in his life, and he said that after his death, maybe his house or maybe his factory, I will want to just give to the NPO, like any hospital or anything else. So when we receive that property, so we will treat it as capital receipt. And if it is about the land or anything else, land, building, house, so we will add this into our assets also, non-current asset. And also we will add into our accumulated fund. Okay, this is very simple. If it is small gifts, so we can treat this as an income. But if it is a property, a building, land, or something else, so we should treat this as capital receipt, and we will add this into our assets, non-current asset, and also in accumulated funds. So after that, we are going to discuss about the life membership. So you may be aware, like if it is about the Chenab Club, which is situated in the Faisalabad, because I am from Faisalabad, so I am using this name, Chenab Club. Okay. So you know that different clubs basically offers you different duration of membership. Maybe they are providing you, maybe they are offering you for their subscription for 1 year, 2 year, 3 year, and they also offer their subscription, their membership for the lifetime. So sometimes possible for a club member to pay a one-off so as to obtain life membership of the club. They will always set a high amount for the life membership. The clubs basically always set a high amount for their life membership. And if you pay to them for the life membership, so it means that you have a lifetime opportunity, lifetime, you can say what can I say? The Chenab Club basically has obligation towards their members to facilitate them for the lifetime. Okay, so such fees should be credited initially to a life membership account. Like we have to make another account which is life membership account, but it is not the part of your O-levels and IGCSE syllabus. Uh, this is basically related to AS levels. Okay, and should then be transferred to the income and expenditure account with equal amounts. Equal amounts means um, if it if it is, but if we are making income and expenditure account for 2015, okay, so we have, for example, 1 CR or maybe 50 lakh member, we have 50 lakh amount as an life membership. So we will only use that specific part of the amount for that specific amount, which is only related to that year. We cannot use the whole amount for the 2015 income and expenditure account. This is a rule. So it is difficult to make an estimate for the life of a member. It is normal for a club to transfer life membership fees to the income and expenditure account an arbitrary number of years. So basically, we don't know that how much the life a person has. Maybe the person will die after 25 years, 20 years. So we don't know about that. Only Allah knows about that. So that is why we just use an arbitrary amount. And the number of years we just, you can say, use in order to calculate the life membership, which is 10 or 20. So if any person get a membership, life membership from our club, and maybe he paid 50 lakh to the club, so we have to divide 50 lakh on 20. So after that we will get an amount for 1 year.